Hello and welcome to this presentation on U.S. Africa housing finance. My name is Amit Dillon and I'm the Managing Director of USAHF. Before I begin the presentation, I would like to read this disclaimer. This presentation is for information purposes only and does not constitute an offer to sell or a solicitation of an offer to buy securities. Any such offer is made only pursuant to a private placement memorandum. Also, nothing in this presentation should be construed as or is intended to be investment, tax, financial, or legal advice. To start with, let's define the problem that USAHF is trying to solve. So there's an estimated housing deficit of 50 plus million units in sub-Saharan Africa. Bottom line is there's simply not enough houses being built. And though various governments have recognized this problem and tried to solve it, it seems intractable at the moment. African banks and other sort of mortgage-related lenders don't really seem to be able to tackle the problem. And the problems are various in terms of challenges with housing in Africa. I won't go through all of these, but the one that we're focused on at USHF, US Africa Housing Finance, is the last one, which is lack of financing. And here is an article in The Economist that talks about this specific problem, just to give people a sense that this is a real and intangible problem that home builders in Africa run into. And so with USAHF, we've come up with what we believe is at least one business model or solution to this problem. And we've put that to test with actually, there are two companies involved here. One on the left is Jobomax, which we'll talk about in a moment. They're a home builder that is currently active in two markets, both Guinea and Sierra Leone in West Africa, and then quickly expanding to Ghana, and from there to other countries as well. And Jobomax partners with USAHF, US Africa Housing Finance, in order to provide a solution to financing in the two markets in which they operate today. A little bit of background on the two companies. Jobomax is a US registered entity that's been in business since 2014, and again, building residential homes, principally in Conakry, in the capital of Guinea, and in Freetown, Sierra Leone, but again, expanding to Ghana and other countries. You can certainly find more details at this URL. USAHF is also a US registered LLC and has been in business since March of 2017. So, certainly has been around for a decent period of time. And USAHF is Jobomax's partner from a home finance perspective. And USAHF has consistently been paying out 9% US dollar denominated return to its investors since its inception in March of 2017. So the company certainly has a very strong track record of paying out this very consistent return. At the time of this recording, USAHF has over $2.5 million in outstanding loans across 65 individual borrowers in multiple countries, as listed here. And I should emphasize that number is only growing. This $2.5+ million has all been raised from private investors. Again, more detail can be found at the URL here, www.usafricahf.com. So with that as a background, this slide I think encapsulates the business model in general in terms of the interaction between the various entities. So moving from right to left, USAHF, which is again a finance entity, takes in private investor capital, predominantly in the United States, but there are a few investors in Europe as well. And this money is taken in. It's been over $2.5 million to date. And then on a quarterly basis, there is a payment made, which comes to an annual 9% return to each investor. There are some investors who choose to reinvest. In other words, they don't take the quarterly distribution, but that's entirely the investor's choice, and the investor can change that choice at any time, meaning they could take the distribution for some period of time and then say, I'd like to now start reinvesting, or vice versa. And that capital that's taken in it's used to purchase home finance contracts, essentially home loans, that Jobomax originates. So Jobomax is a home builder. They market, build, and sell houses in West Africa. Again, specifically right now in two countries, Guinea and Sierra Leone, but rapidly moving towards Ghana and others. And so Jobomax has a relationship, of course, with its buyers or its customers. And these buyers are almost exclusively African diasporans, meaning people that are originally from Africa, but living in a different country. They've emigrated out. And again, that could be the United States, Canada, UK, Germany, France, and a host of other countries. And the typical motivation for these home buyers is they would like to purchase a home back in the country of their origin, specifically in Jobomax's case, Guinea or Sierra Leone. And the motivation for these buyers sort of runs the gamut, but it could be because they want to retire and so would like to have a property for that. It could be because they have family, siblings, elderly parents and the like that they want to purchase a home for. They could be purchasing it in order to rent on the local market. So there can be a variety of different reasons why an African diasporan might want to purchase a home back in the country of their origin. But bottom line is there is a legal contract, loan contract, home finance contract between Jobomax and the buyer, wherever they may be located. And then what happens is the Jobomax, after originating that loan, sells the receivable to USAHF. The receivable in this case consists of a monthly payment, which is broken up into interest and principal. And what USAHF does is that they take the interest portion of that payment and they use that to pay out the 9% return to capitals, to investors. And so Jobomax aggregates the principal and interest payments from all the various customers in the portfolio, and once a quarter forwards that to USAHF. And again, USAHF uses the interest portion of that to pay the return to its investors on a quarterly basis. So hopefully that's reasonably clear in terms of the what we call the virtuous cycle or the business model for USAHF. Moving forward, this is just a couple of aerial photographs of some of the developments. Two of the developments, these happen to be in Guinea, but there are multiple developments beyond this in Guinea, as well as multiple in Sierra Leone at this point. But this just gives folks a general sense of what we're talking about. I've personally been to the sites myself, and they look very much like a home community that you might find in the United States or in Europe. Now, in terms of investing in USAHF, there are really two options that an investor can choose either option. The one on the left here, I refer to as the equity investment. And the reason is because when you take this option, you actually become a member of the LLC. And you are entitled to a 9% return, at least historically, paid against each dollar that you invest. There is a 4-year minimum commitment. As I mentioned before, the dividend is paid quarterly, and from a tax perspective, the investor will receive an IRS K-1 statement by mid-February of each year. The second option is debt, and that's in the form of senior promissory notes, and they can be 4, 5, or 6%, depending upon the duration, 90 days all the way up to 2 years. They're inherently lower in risk because they're senior to the equity. Just like the equity, the dividend is paid out quarterly, and from a tax perspective, the investor receives an IRS 1099 INT statement, which is very much the same statement one would get for interest in a bank account. And then there's the option to upgrade to equity at any time with no penalty from debt to equity. Now, the obvious question many investors ask is, okay, this is home loans that are involved in Africa. So what do you do in order to mitigate risk? And so here I think is a reasonably clear set of things that we do and we take very seriously, from a fiduciary perspective to mitigate risk to our investors. First of all borrowers live and work in an OECD country. I've mentioned before countries like US, Canada, France, and the like. All contracts, in fact, everything that we do is all denominated in US dollars, so there's certainly no currency risk. From a loan perspective, typical loans are 10 years at 12% interest, but they're varying terms as well. There's no penalty for early payment, and in fact, we've observed that our borrowers are very eager to pay off the loan more quickly than they have to. And we have very rigorous underwriting criteria, which I would be happy to describe to somebody if they were interested in investing. And one very key thing is the borrower must pay a minimum of 30% down. So we will only finance 70% of a loan. And that right there is very strong from a mitigation perspective, because if the borrower's already made 30% of the payment, then they've got a fairly high amount of so-called skin in the game. And so their likelihood of defaulting reduces significantly. In addition, we retain the land title until the loan's been paid off. So in that sense, this is not a mortgage, and one should not view this as a mortgage. It's more of a lease to own type of scheme. But it acts very much like a mortgage, meaning there is a consistent monthly payment that's broken down by interest and principal, and there's an amortization table and so forth. The next to last bullet, I think, is one of the most important, which is the current loan to value ratio of my entire portfolio right now is 58.1%. What this really means is one could randomly pull a loan from the USAHF portfolio, and that loan is likely to be more than 40% already paid off. In many cases, it's quite a bit more than that. But minimum, of course, is going to be 30% payoff because that's the down payment required. But on average, it's going to be well over 40%. Again, and this is extremely important from a risk mitigation perspective, because obviously if you've got that much skin in the game, you've already paid that much of the loan off, your likelihood of default reduces very significantly. And finally, people rightfully ask, well, what about defaults? Have you had defaults to date? To date, there have been five defaults. And the key, though, is there's been no loss to investors from any of those 5 defaults. And the reason for that is we've been able to intervene when somebody fell behind on payments and essentially do a short sale. So in other words, Jobomax resold the property on behalf of the customer that couldn't keep up with the payments. And that way, and returned any excess funds back to the defaulting customer. This way, the defaulting customer was able to get out of the obligation. The house was resold. All back finance charges were paid, hence no loss to investors. And really, it turned out to be a win-win for everybody across the board. And then finally, there's no currency risk because all transactions are in US dollars. And from a political risk perspective, Jobomax maintains a local management team on the ground in both Guinea and Sierra Leone. And certainly, as I mentioned before, are expanding to other geographies such as Ghana and others. And obviously that spreads the risk out as well. But again, USAHF has been in business since March of 2017. And in that period of time, none of this has been an issue. And as we talked about before, land title, Jobomax has a very rigorous process for land title verification and acquisition. So for those that are interested, based upon this video, if you'd like more information, feel free to contact me directly, Amit Dillon, Managing Director of USAHF. I can be reached at this email address, amit@usafricahf.com, or at the mobile phone listed. WhatsApp, text, or a straight phone call are certainly welcome. Thanks again for listening, and we hope to hear from you.